What up, what up, what up? Happy New Year's Eve, you guys. I am Victoria, the credit solutionist here from PX Credit Solutions, where we help you secure your financial future today. Happy New Year's Eve. You're here because you want to know the difference between debt consolidation and debt settlement. You're here on a fantastic night because going into 2023, it's going to be a big year for finance. That's what the stars tell us, and that's really what the economy is telling us as well. Ask your boy Jerome Powell. Now, you're here because you are probably at a crossroads right now where you are reaching the boiling point, the tipping point, where your debts are just becoming astronomical. You do not have enough money to continue to pay your minimum payments every single month and survive. Gas is going up, food's going up, your wig budget is going up. Okay. We need to get to the point where we have more money at the end of the month than we do bills. That is why you're here. Debt consolidation or debt settlement. Let's go ahead and talk about it. As you guys are coming into the video, I want you to I want you to tell me where you're watching me from. Give us your city and state. Give us your region of the country. Give us your region of the world. If you're here from another part of the world, wherever you're from, welcome. Tonight, we're going to just go ahead and keep it short and sweet tonight because I want y'all to go off and sip your champagne. Do what you are supposed to do. Again, coming at you from mycreditcall.com. If you need to pretty much get your credit repair journey started or you need to talk to somebody about your budget strategy, you want to contact us at mycreditcall.com. Now, I'm not going to hold y'all very long tonight. We're going to talk about the differences between debt consolidation versus debt settlement because there are definitely pros and cons to each one of these. In 2022, my debt consolidation video did the best on this channel. So I feel like it's proper to close out the year talking about the one topic that has done me the most justice on this channel and has paid me the most when it comes to AdSense. Now, of course, if you're new here, welcome. If you are returning, you already know the deal. Come on in, take off your shoes, and let me know what you're drinking because you know I got you. Now, we can't begin this conversation without understanding what consumer debt really looks like. When it comes to debt consolidation or debt settlement, the reason that you're there is because your debt is now overwhelming. You're at the point where you cannot handle it. Now, there's a reason that this happens, and you are not alone. So let's take a snapshot and look at consumer debt as an American population in the year 2021. We already know it's worse because we're in 2022, hopping into 2023. But I want to give you some perspective here. When it comes to consumer debt, like I said, you are not alone. The average credit card debt is $5,221. Honestly, if this is all you have in credit card debt or in debt in general, $5,000, you can handle that in 180 days. I need you to log off of this video because this is not for you. We are talking about the heavy hitters when it comes to debt. We're talking about those of you that have personal debt that's an average amount of $17,064, auto loans that are $20,987 or more, student loan debt because your government is not about to pay your student loans off. Forget that dream, okay? 39,487 is the typical standard student loan debt of your average American. Let's not even talk about how we went in last night on the soft life girls. We know African American brown sisters like me have credit card or have student loan debt coming out of college of 41,000 plus. Okay, so we're not even at the average here. We're more, okay? We're talking about those of you that have mortgage debt. That's about 220,000 plus dollars. Or you have taken out a HELOC because you want to improve your home. That's okay. Mortgages and HELOCs, I honestly forgive you because at the end of the day, you now have a cash bearing asset depending on the region of the country that you're in. So you may not even need the debt consolidation or debt settlement information that I am about to give you tonight. Now, the reason that we want to talk about this is because I have been doing so many calls from mycreditcall.com where people are business owners, working class people, people with degrees, people that are educated, beautiful women, handsome men. I have been talking to all kinds of people that are struggling with their debt. Now, on the surface, they are keeping it together, but y'all below the surface is like an iceberg. Those people got stories, okay? And I am the person that actually hears those things. Now, in tonight's video, we're going to talk about the differences here because I want you to be able to make sound decisions when it comes to taking care of your debt. And what better way to know where you stand? Because when you know where you stand, you can then create a plan and take the next actionable step. And that is what 2023 is all about. So let's first start off with talking about what is debt consolidation in the first place. Let's go ahead and look at a website here that kind of gives us a basic definition of what debt consolidation is. So, debt consolidation programs, a debt consolidation program is a service designed to help borrowers pay off their outstanding debt. In these programs, consumers receive the tools to develop loan repayment strategy with which to manage their existing debts. Now, here's the most important part. These programs allow the borrower to make one monthly payment, which goes towards all outstanding debts. Okay, usually on a timeline to get the borrower completely out of debt within 3 to 5 years. This is super duper important. So let me go ahead and explain how a debt consolidation loan actually works. So let's say you have 5 credit cards with a balance of $5,000 each. Okay, that's $25,000 of debt. Now, instead of paying each one of these credit cards individually at 20+% per credit card every single month, you decide to go ahead and do debt consolidation, which means you're taking out a personal loan or some type of debt consolidation loan that's the full amount of those balances that you owe. You use that loan to pay off those credit cards, and then you pay off that larger loan every single month in installment notes. Now, when you pay that installment payment every single month, you're going to be paying less interest for that larger loan that you have, which pretty much eliminates the paying extra for the 20, the 25, the 30% credit card that you have. Okay, so debt consolidation helps in that way. It basically consolidates everything that you have to one payment. Now, there are some pros here when it comes to debt consolidation in that when you get this big, jumbo loan, for lack of a better term, you're going to be able to pay off those credit cards or those loans that are owed, and you get to keep your positive payment history with those credit cards because now each one's going to be at a zero balance. And you're now just going to have one account that you're paying on over time with lower interest. So, debt consolidation is a really great option for some of you that are wondering what to do with this mountain of debt that you have. Now, there are some stipulations where you do have to have a pretty decent credit score, but there are ways to kind of get around that we would definitely discuss during like a consultation or something like that. But for the purposes of tonight, we're just going to talk about like the general gist of debt consolidation versus debt settlement. Now, you may be someone that is overwhelmed with your debt and you're thinking, okay, it sounds good, but I may not qualify to get this large jumbo loan to be able to pay these smaller credit card bills off because my credit just sucks. My credit score is terrible. Okay, for that reason, you may be assuming that debt settlement is something that might work for you. I would venture to say you probably haven't discussed all of your options. And again, you need to talk to a professional. I'm not going to toot my own horn anymore. You could talk to me or you could talk to somebody else. It's totally up to you. But I think going into debt settlement, I think that we need to get a full understanding of what debt settlement truly is so you can get the understanding of whether or not it's something that you should actually be doing. Now, debt settlement is really something I say that you should not do unless you are in the back of your mind considering bankruptcy. You literally do not care. You are at the edge of the cliff and you are going to jump off. All it takes is literally just like somebody to blow on the back of your neck and you just going to jump off and just give up everything. That's when I think that you should consider debt settlement because debt settlement is going to have a long lasting negative effect that I don't think a lot of y'all are even aware of. So let me go ahead and pull up some information here where we can compare and contrast. So before we do that, though, let me just give you a quick rundown of what settlement actually is. So the way that debt settlement works is there's a company that is willing to pay off your debts. Technically, you pay them off, but what they do is they wait until your accounts go into collections and all that good stuff, and then they contact all of those creditors and they try to negotiate your debt for less than what you actually owe. Now, if you know anything about credit, you understand that you can't really settle a debt or negotiate a debt until it's in collections. So let's say you have 5 accounts that are all current, but you're just having trouble keeping track or making your payments on time. You're never 30 days late. You have no negative marks. You're just struggling with paying those bills. What the debt settlement company will do is they will then come in and say, hey, we're going to go ahead and charge you this fee, and we're going to need you to go into collection. So stop paying all of your credit cards, risk having negative marks on your credit report. And then after that, we're going to call and negotiate to see if we can have you pay a lower balance. If you know anything about credit, again, you already know that this is already something that don't really sound right. This is just like going to get a payday loan instead of just waiting and eating some beans and rice before that check comes through at the job. Okay, this is what debt settlement is. Debt settlement is more of a Hail Mary. It's more of something that you do when you are in dire straits. Okay, this is like literally the the step that you take before you file bankruptcy. Okay, so that's really what debt settlement is, in a nutshell, but we're going to break it down a little bit more right now because I want to do a compare and contrast. I already told y'all we're not going to be here very long because I know you want to do things with your loved ones tonight because it's New Year's Eve. This is a very poignant New Year's Eve for me, and I really hope that it's the same for you guys. So let's go over to Lending Tree, and we're going to compare debt consolidation versus debt settlement. Now, keep in mind, debt consolidation is really a tool that you use to maintain your good credit. Debt settlement is when you don't give a crap and you're willing to take the L and ruin your credit for the next 5 to 7, possibly 10 years. Okay. So let's talk about factors to consider when we're thinking about debt settlement versus debt consolidation. First and foremost, we want to consider the fees. Okay. Now, with debt consolidation, you run the risk of only having a 3 to 5% transfer amount, meaning if you transfer your balances over to the personal loan or vice versa, you have about 3 to 5% of the balance amount that's transferred. That is peanuts compared to the monthly payments that you're going to be making on each one of those credit accounts separately. Personal loans can also have an origination fee of about 1 to 8%. So what that means is with a debt consolidation, if I didn't mention it before, a debt consolidation can be a literal debt consolidation loan, or it can be a personal loan that you are issued and then you use those funds from that personal loan to pay off the debt. Okay. So there's always going to be fees associated with that in addition to your interest that you owe every single month. When it comes to debt settlement, here's where the fee schedule gets a little sketchy. Now, the fees can reach as high as 60% of the enrolled debt. So if you owe $20,000, your fees can be 60% of that $20,000 on top of some other fees that we're going to talk about in a minute. Debt settlement is a lot more expensive than it actually looks on the surface. Now, you also will have an enrollment fee and you'll have account maintenance fees because the thing about debt settlement is that when you are making your monthly payments, unlike a consolidation loan where you're paying the loan directly, with debt settlement, you're paying your monthly fee into an escrow account. And every time you pay into that escrow account, you're paying on a hope and a prayer that they're going to be able to settle that debt and that money's going to go towards that settled debt. You don't really know if that's the case and that's what's going to happen. There is no guarantee that those debts will be paid. More on that in a minute. Now, effect on credit. When it comes to debt consolidation, you can expect an initial dip in your credit score. And that's when you open the new card or the new account. That's because two things are going to happen when you do a debt consolidation loan. You're going to have a brand new loan on your credit history, which is going to affect your credit age. And then you're going to have an inquiry because you have to have an inquiry in order to qualify for the consolidation loan or the personal loan in the first place. These are very cosmetic. These are things that are very short lived, and it's not going to affect your credit for that long. This is on the debt consolidation side. Now, on the debt settlement side, if you have had no late payments, your credit score is going to take a massive, astronomical trash fire dump dip if you go for debt settlement. Because, like I mentioned 20 times before, in order to even go into debt settlement, you have to be in collections. It is not worth it, you guys, because you're going to have fee after fee after fee on top of late payment after late payment, eventual charge off, possible lawsuit on your credit report. These are the chances that you're taking with debt settlement just so you can save a few dollars. And everything that a debt settlement company can do, you can do on your own. That's what adds insult to injury with this, okay? That's why I get a little annoyed. Now, let's talk about tax implications. That's this guy right here. For debt consolidation, there are literally no implications when it comes to your income taxes, okay? Unless you take out a 401k, like a loan from your 401k, and use that to pay off the debts, then there might be some tax implications. But typically, that's not what you're doing in a debt consolidation loan, okay? Now, when it comes to the debt settlement is a lot different. Now, I did a video on this, I think like 2 years ago, where I talked about settlement and collections are income. I don't know if y'all heard me, but I want you to hear me tonight. Now, you may need to pay taxes on the portion of the forgiven debt. That's what debt settlement will get you. Okay. Not only the fees to enroll, the 60% of the debt that you're going to pay in fees, but you also are probably going to end up having to pay income tax on the difference that gets written off. Let's say you have a $20,000 debt, they're able to negotiate it down to $5,000. You now owe taxes on the $15,000 that that collection agency wrote off on your behalf. So if you get a 1099, I believe it's a 1099K, if you get that in the mail, don't ignore it because it's been reported to the IRS as income that you now owe taxes on. So do you see how debt settlement is really just digging yourself into a hole, jumping in, and then throwing the dirt on top of yourself right before the biggest storm of the season? Like, it's literally financial unaliving, we'll say that. Now, how much of the debt gets repaid? When it comes to debt consolidation, you save on interest payments, but you'll still owe the same, like the entire amount. That's not that big of a deal. I don't really think that that's a con because if there's an amount that you owe it. With debt consolidation, you pay it off in a fraction of the time and you pay a fraction of the interest. So there's nothing wrong with paying the full amount because you're paying it with less of a premium. When it comes to debt settlement, on the other hand, you can expect to pay 50% to 80% of the total balances that you owe. But remember, you're going to pay fees on that amount that you owe completely. You're going to pay fees to the company, and you're also going to pay the income taxes on the amount of the debt that gets written off. So you stand a chance of paying income tax on 20 to 80 or 20 to 50% of the debt that's actually written off. Now, debt and credit requirements. Debt consolidation loans typically do require that you have a pretty decent credit score. With the debt consolidation loan, it's because of the fact that they're loaning you such a large amount of money, you probably will have to have a particular type of credit score. Now, I would say when it comes to a debt consolidation loan, we want to look at companies we already do business with. So if you already have a bank where you have direct deposits coming in from your job, that's who you want to go to first for a personal or debt consolidation loan. Conversely, if you also have a credit union, I would say go to your credit union before you go to a bank because they monitor your income, they monitor your credits, they offer the best rates as far as interest known to man, right? Y- credit unions are really the way to go here. So if you're going to be worried about your credit score and things like that, definitely apply for the debt consolidation product with the company you already do business with. Now with the debt settlement, there really is no credit score requirement. The reason that there's no credit score requirement is because they're going to be collecting so much money from you anyway, and you're already going into collections. Your credit score on the onset doesn't freaking matter. It really doesn't matter because your credit's going to suck by the time you finish with them anyway. You're literally going to lose up to, I would say, possibly 200 points because you're not only going to have late payments, you're now going to have settlements, you're going to have all kinds of wackadoodle stuff that's going to be on your credit report for the next 5 to 7 years. So, how dare they even require that you have a specific credit score when they know that they're going to obliterate and butcher your credit score once they're done with you? Debt settlement is just one of the biggest. I don't want to call it a scam because it's not a scam, but it's a scheme. And it's really not something that we want to use because if you're going to do debt settlement, I honestly think that you should just consider filing bankruptcy. Again, I'm just, giving that information for education purposes. I don't expect you to do exactly what I'm talking about, but if you need information that's like specific to your, you know, specific situation, obviously you're going to hit me up at mycreditcall.com. Now, the last question here is, can you continue to use your credit cards or your credit accounts once you consider debt consolidation or debt settlement? When it comes to debt consolidation, yes, you can, because you're getting a big loan here to take care of the smaller accounts that are already open. Once you pay off all of those accounts, they're still open. That's the beauty of it. You get to maintain your beautiful credit score. I caution you because you need to be sure that your spending habits are under control because it doesn't make sense to have a debt consolidation loan and then run up the debt on all of the credit cards again. Right, because then we're going to be right back where we started. Now, when it comes to your debt settlement, can you continue using the accounts that you're going to pay off with the debt settlement? No, you cannot, because remember, you're already going into collections. You're already past due. The creditor is going to close the account due to non payment. You're screwed. All right. So that's going to follow you for 5 to 7 years. So again, debt settlement is Hail Mary. When we're in desperation mode, we don't know what else to do. Debt consolidation is we notice there's a problem. It's pretty notable, but we're in a situation where we can still fix it. If you are considering either one of these options, you better book your call. Go to mycreditcall.com, get it together. All right. I will take a look at it. I will give you a thorough analysis. We'll run through the pros and cons together because 2023 is the year of income, money, abundance. Okay. Lack is leaving us tonight. It's 2022. We're done. We're done. Tomorrow is already the first of the year. There's a whole thing that I want to talk about why January 1st and just January in general is special. Not just because it's my birthday, January 8th. If y'all want to drop me something, let me know. Cash App, going to be in the description below. All right. Matter of fact, dollar sign, the credit solutionist. Hit me up on Cash App. My birthday's January. But anyway, guys, I didn't want to spend too much time on tonight's live stream. And realistically, I want to log off. I want to have a glass of wine. I want to just think about the year that I've had here in Virginia. And that's really it. And think about 2023 and where I'm going to be, where you guys are going to be, and how much abundance and just wonderfulness is going to be in store for us for the next year. So I won't hold you any longer. It was a short one, y'all, but I hope to see you guys on January 1st, bright, looking beautiful, and just ready to hit the ground running. All right. mycreditcall.com. Hit us up. We will get you where you need to go, guaranteed. I will see you guys next year. Credit Solutionist out.